markets, what are you looking at? How are you reading it right now? Do you expect this flattish move right now, or how is it that you're seeing?
No, I think a lot of negativity is getting priced into markets, but since the last sell-off on the yen carry trade panic, I think we haven't gone below that low. We're sort of holding it there, and I think forming a basing pattern over the last 1 week. I think eventually it picks up and starts moving higher in line with what world markets are doing. If at various other emerging markets, specifically parts of Asia, but even say we go all out to Brazil, we do see a significant rally in Brazilian stocks. So it raises the question, why not India? Especially when you have an environment of a weak dollar, falling bond yields, which is typically good news for emerging markets. I think we've been just bogged down by some of the sentiment news flow in the short term. But once we overcome that, markets will join global equities higher based on the macro. So that is where I think we are. The risk to the downside should be almost negligible, I would say, right now, looking at the last 2 days of selling, and the sentiment.
So can we say that when you say that all the negatives are actually getting priced in, the cracks in some of the broader market stocks which we are seeing, this froth actually is getting cleansed out of the market. Do you expect it to accelerate on the downside before a bottom can be made, or you expect time-wise correction next few months to be sideways?
No, so this is all going to be a play between stocks, sectors, overvalued, undervalued segments. I don't think it's like if you have, one sector or one segment of the market overvalued, it falls and everything else falls with it. That's not going to be the case. I think they will be buying and selling. So every time they're selling in some of the counters where there may be overvaluation or there's a crack. On the other side, you have buying which is coming into segments which are undervalued as well. And you've seen that, for example, in some of the banking names, though they may be down, Bank Nifty is down, but post elections, we did see a good rally in, bank names like HDFC Bank was really beaten down, and you did see a run up. Now you've seen a retracement of that run up. It's not gone back to the lows. And so similarly in pharma, we had a lot of stocks last year in pharma which were down over the last 12 months. They've all rallied pretty well. And they're actually not even giving up the gains right now. So I think that kind of rotation will be there. The market is continuously searching out for new ideas where money needs to be put, because the flow has not stopped. The flow is still there. The funds that are really scared, if you speak to fund managers who are scared about the market, are simply sitting on the additional flow which is coming in. They aren't really selling. Whatever little selling pressure still seems to come is from foreign institutional investors. There also, they had gone excessively long in the futures market. All of that is now unwound. So if I just go back a month, 390,000 contracts were long in the index futures segment. That is now gone negative yesterday. It's a minus 22,000 contracts, which is short. So till day before, it was still slightly long, but now the entire long is unwound. So they've given up. They've all sort of given up on their entire long posture, which they had taken post the election results. And that's
Rohit?
a good setup. So you've done a lot of the cleansing, I think, at a sector specific level, because even if you go to a sector like metals, it has, sold off to the 40, 50 week average, which is a very good support and buying point. And you have the, weak dollar environment for commodities also. Most commodities also, I think, are just bottoming out and waiting for triggers to start heading much higher.
Rohit, I want to talk about a section of the stock which are doing well past few days is the Sanjeev Goenka Group stocks. Look at First Source, look at RPSG Ventures, Philips Carbon Black. All of them are gaining very smartly in trade. Anything? Have you looked at this pocket?
So no, I've not looked at the RPG group as such, but I do see that if you go into the cash market and we say, mid cap is overvalued or so, but there are breakouts happening in mid cap, small cap stocks of such companies, of groups that we've known for, the last 2 decades, and they were in a like 10-year range or 15-year range, and they've actually broken out to an all-time high. So I am seeing that in various other stocks happening. And those are signs of, something new that is completely taking place. I think, like I said, so money is basically shifting away and finding new pockets which are undervalued. And that is why you're seeing these jumps up in other stocks. And that's what I think investors should also focus on. look at that shift. But don't expect too much damage in a growth stock that is overvalued. See, that could also be a wrong mindset. There are two types of growth stocks. I mean, you have those which are undervalued and not growing, like you're seeing in chemicals. People have been waiting for the chemical cycle. But if I actually look at a valuation chart of chemical stocks, I find that the valuations are going up, even as prices were going down. So that shows, weak performance. But on the other hand, there are stocks which are growing and valuations are high. And that doesn't easily end, because if you are growing, then markets can end up keeping you overvalued for a prolonged period of time. For example, you can see that in a stock like Keynes Technologies, which has been growing rapidly. And if you simply look at a PE ratio or something in triple digits, you will not feel like, getting into it. But that's just the way this market is.
Right. Other than that, anything interesting that you are finding, or as of now, would it be more on the defensive side, or anything that you would look at? IT, pharma, FMCG, anything on that front is something looking exciting to you?
Yes, I think banking itself, the most beaten down and undervalued stocks are in the banking space or the financial. Even some of the NBFCs I've looked at that have been growing for the last 3 to 4 years and are actually underperforming. We also see that in some of the auto stocks that were not doing so well. So there are a lot of these pockets, and these are even some are large caps, mid caps, not necessarily mid caps, they're even big companies, because a lot of money is just gone somewhere else. So despite, showing growth of 20-30% in earnings over 3-4 year periods, the prices have not really shown similar performance. So these pockets do exist, and I think in a large index, in a large sector, I would think banking is one which is going to contribute a lot to the next rally. It may still not be doing so, but I think it will. So it's the dark horse, I would say, of this market that's going to, suddenly surprise everybody.
Since you are bullish on banking and not moved a whole lot, you're saying it's time to get in. Would you also look at some of the small cap, mid cap banks like, say, RBL Bank or even Bandhan Bank for that matter? Some of them which have got beaten down. What's your view on this pocket, or you'll stick to larger ones?
So far, the bet on those smaller ones has not always worked out. I've tried to look at them. They just fail to pick up. I'm sure they will at some point of time, because even banking has been as such beaten down. So I would like to start with the big ones first, because that's where performance initially will show up. And then it will probably shift down the line. So it will shift down the line, but I think start with the large caps first.
Okay, Rohit, thank you so much for joining in with us this afternoon on EG Now, and happy Independence Day to you as well for tomorrow, and enjoy hopefully the long weekend you may get as well. But thank you so much for joining in with us.
If you like this video, then like, share and subscribe to ET Now.